right? You are all here for the panel. Okay, so please welcome the panel Forefront of Crypto Adoption/Exchanges. I will let the speakers introduce by themselves since there are 5 of them. Sorry, guys.
Sorry, guys. We are the graph.
One, two. Okay, we're on. Hi there, I'm Vlad. I host the Bitcoin Takeover podcast, and I got invited here for the purpose of interviewing these fine gentlemen who are working for some of the most prominent and liquid exchanges out there. And first of all, I'm going to give them the chance to introduce themselves, and then we're going to talk about business.
Okay, so hi guys, thanks for joining us today. My name is Dorian. I work with KuCoin. I've been with them for more than 3 years and a half now, and I manage mostly all types of partnerships within Europe with the exchange. So that ranges from institutional partnerships, especially with market makers, funds, brokers, etc. All that is more institutional related with crypto, to any kind of partnerships regarding payment that I can introduce. I can give you the right internal teams, etc. So do not hesitate. If you want to reach out to KuCoin, you have the guy here. At the end of the panel, you may come and reach out.
Yeah, hi everyone. My name is Ilie Puscas. I'm the CE, Central Eastern Europe Regional Manager for Binance. And yeah, I'm happy to see so many people in the Ethereum conference here in Prague. Happy to connect after this panel.
Hi everyone, I'm Vugar Usi, CEO of BitGet, the second largest exchange after the Binance. For now, we serve 120 million customers and we move almost $2 trillion every quarter. And I'm also happy to be here and see how we can scale and maybe discuss when the next ETH all-time high will be. A very big debate.
Soon, please.
Okay, I know that I gave you guys some questions to prepare, but let's begin with the spicy stuff. Because if you read the news today, you're going to find out that the creators of Solana got doxxed and even their wives, because there was this Coinbase KYC database leak. And I guess this is one of the main inconveniences of centralized exchanges. You guys have to be compliant, you have to collect data. And I was going to ask you, how do you manage and how do you deal with this data collection without leading to your customers getting doxxed and having that situation, which I think we also saw after the Ledger hack, when people were receiving a lot of mail at home, some of them got kidnapped, and it's really not nice.
I think the same question we can go ask to any bank or even your supermarket when you sign up for loyalty program, any telecom company. And I think this is not only an issue of a centralized exchange, this is an ecosystem issue or government and compliance issue. And I know that several governments got hacked also, and the citizens' data has been leaked. Therefore, we have to understand how the technology should evolve in order to prevent such hacks happening and what kind of legal and legislative limits should be in place. Because if today a government and lawmakers force us to collect certain amount of the data, store and render, and to make sure that we have a hold of it, it means then we are not the only responsibilities. But I believe the Coinbase could have done better, but also they decided not to pay the ransom and deal with the entire situation. I think it's kind of a going hand to hand. What is actually needed to make environment safe, what kind of data we need to store, or what kind of data we don't have to store at all. But also we have to understand how technology can become impenetrable.
Yeah, for us at Binance, we have huge compliance team. You have huge teams of financial crime prevention. And after protecting the user funds, I think the next main goal is protecting users' identities. But this should be also hand in hand with the users. Basically, it's our responsibility to make sure that we're so advanced in protecting this data, but also teaching the users about how they should protect their own data. From having two-factor authentication to delinking their crypto activity from the real world. So other people are not that aware of how many assets they have and where they store them and so on.
So building on top of what my colleague just said, first, as you mentioned, this kind of problem is really not only about exchanges, and it's a problem that any kind of company that is storing personal data of users has. And I'm gonna give you an example of something that happened quite recently, and I was really shocked when it happened. One government of the EU, a judicial system was hacked, and we received requests from them to lock accounts from official email addresses of guys who no longer worked at the Justice Department of that country. And for many weeks, we were unable to sort it out because they would not even answer us with official channels to sort things out, to tell us if it was actually still a judge, and well, I should not even say. Okay, just forget you heard that. But yeah, it was still an employee of the judicial department of this country. And we finally had the answer after more than a month or two. And so this is really something that doesn't impact only us, it impacts everywhere. The only thing is that it's much more advertised, I would say, when it touches to crypto, because there is still this media frenzy around the crypto world that they want to see us fail. It makes high titles everywhere. They really know they're going to sell attention. They are going to grab attention of people about when they speak about that. So they are doing it. Everything is becoming some kind of further opportunity, etc. But it does happen to governments too, and more than it seems. So that's one point. Second point you mentioned is obviously we have obligations in terms of security. There is one aspect that is for the user to maintain. At this point, if on your exchange you're not having 2FA, or your exchange doesn't push you heavily towards using 2FA, really you need to get worried, because this is now a standard, and with the arrival of passkeys everywhere, biometric validation of your transactions, etc. So this is moving in the right direction. That's the first start. But then on our end, I think I'm speaking for all of us here, we're not like security engineers. We're not going to tell you exactly how the data is stored, etc. So this is going to be like more a personal take. I know at KuCoin more than 2/3 of the employees are tech related. So that's something, and I hope the way they store data is actually that there is no single entry fault point that is not designed this way, so that if at some point one safe fails, then you can grab the user data all at once. I really hope this data is somehow siloed in the same way that you can use multi-sig for transactions. Most probably it should be the case that you can do this with user data. And actually it's the case when you see at the kind of user data that is leaked, it's always fragmented data. The problem is, I would argue, it's not fragmented enough, since you can recollect like the name, the address, etc. Of all, so still not fragmented enough, but there is already this will, at least.
Well, I guess we can all agree that the safest data is the one that you don't register on the internet.
Or alternatively, governments could go and put everything on chain, and then we don't even have to collect it. We can just connect to their portal, verify, forget.
Yeah, phone book on chain. I don't know what to think about that. In this day and age, it's not really the way to go. But anyway, I was going to ask you, how does it feel? Because most of the people attending this event are builders. They're trying to build lending platforms. They're trying to build on-ramps and off-ramps and ways to basically not use centralized exchanges. There are DEX builders. There are all sorts of automated market maker builders. And you guys are maybe advocating for the old way of doing things. And I just want to ask you, how does it feel to be here, and what's your relevance within this picture where people try to route around?
Yeah, so we actually support those type of innovations and innovators most often. And actually even Ethereum is an example of being listed on Binance and providing liquidity from our side and so on. So the growth should be supported by centralized exchanges like Binance, like the other exchanges in the market and so on. And in the end, it seems like the centralized exchanges are the ones bringing the new users. We are converting the grandmas towards the Web3 because it's so simple to use the centralized exchanges compared to the new Web3 solutions. Maybe that's something to work on in the future, simplifying DeFi and the Web3 solutions even more.
I like Ilie already mentioned, and also I believe as a centralized exchange, every event we go, the most questions we get is how to get listed or what kind of investment opportunities are there. And at BitGet, we have two initiatives for $10 million each, blockchain for use and blockchain for her, that we invest in all sorts of blockchain ventures, and this we call non-string attached investments. It's basically grants that we give out. And then we have $100 million in Power X fund that we invest everywhere from the EVM compatible layer 2s to, I don't know, Tone Foundation, Catizens, Dogs, and many other places. And because we believe that whatever corner of this industry we are such a small community and we are such a small ecosystem of $3 trillion, it's nothing, therefore we have to support each other. And whether someone building the next best DEX or whether someone is building even the competitive exchange, we are probably gonna go invest and do some things together. There have been like a Morph layer 2 that KuCoin invested, we invested all together, Dragonflies came in. And this is always the narrative in the industry because we are very small and all we have to do is support each other.
Yep, you summed it up pretty well. It's actually not, how to say, it's not just competition in the sense that we are taking from one another. Actually, the whole cake is growing all the time. The fact that there are more DEX solutions right now didn't prevent us to grow to the stage that we are now. And the fact that DEXs are growing, like even what we've seen with Hyperliquid and all that recently. Okay, in the case of Hyperliquid, they really took a lot of volumes from other DEXs, but that's another topic. But in the sense that the whole industry is booming. So there is a place for more centralized agents, there is a place for more decentralized agents, for more decentralized protocols, etc. And actually, when you think of it, it's always kind of a spectrum, because there are solutions that are more decentralized, totally decentralized. There are solutions that tend to try to mix a bit of both. I'm thinking about, for example, 1inch and their solution for more institutional players, because the liquidity that they have on the pure DEX product is not suitable for institutional, and that we know as centralized exchanges, it's very hard to meet the needs of larger players. So they had to create some kind of a more centralized product just for that. So now we are on the spectrum, we're still talking about the DEX, but we are more centralized. Then we have us, which we integrate, I guess, by now, all Web3 wallet, where users can switch from their Web3 interface to the exchange interface in one press of a finger. So one moment your assets are on the exchange, the next second they're on your Web3 wallet. So that's something that we implemented, I think, quite recently, all during this last year. It's also something that tells you, like, it's good that there is this competition, because if there was not, maybe we would not be pushed towards adopting more hybrid solutions, more decentralization, etc. So in the end, it's a very good thing that all these products are trying to take over, because it makes us move, once again. And we have been doing it quite efficiently, I think, in the recent years, especially with everything that happened during the 2022 bear market.
That's so true. For example, at BitGet, we just introduced BitGet on-chain. Basically, you can buy any on-chain asset with the security of the centralized exchange without leaving. And to add up on the same idea that now we are kind of blurring this distinction between what is decentralized and what is decentralized, as long as you are able to bring all your assets and move them around as fast as possible. You don't have to even worry, and I believe soon there will be more opportunities to buy an asset from the DEX and bring it to the SEX or the other way around.
And I think one thing that we will agree with pure BTC maxis and pure ETH maxis is that the only important point is not to be compelled with the solution you're choosing. Meaning, like, I don't think there are large advocates of, at the moment currently, of fully decentralizing everything like mandatorily for everybody. I don't think this position actually seriously exists in the space. Well, in the same way, we don't have the position of saying we mandatorily want to centralize everything. Like both of these extremes are, well, as I just mentioned, extremes, but the reality is much more in the middle ground, and it really adapts to the type of users we're encountering. And most of the time, as you mentioned, we are taking the grandmaster crypto. Or maybe not the grandmaster, but still, let's say the oldest models.
Yeah, you said something interesting, Dorian, that we're on the spectrum, and I agree with that. I don't think anyone gets the joke. Anyway, you know, the spectrum. Anyway, you mentioned grandmas, and that's a very important talking point because right now the main purpose of centralized exchanges is to onboard normies. They see an advertisement on TV, Super Bowl, whatever. They see, I guess, some of your exchanges are also sponsoring Formula One race cars and sports teams, and it becomes interesting because they look that up to see what's on the t-shirt or the car, and then they end up buying some coins. But I was going to ask you, is there anything else that you're doing in terms of services that you don't find in DeFi, except for the onboarding process?
Honestly, I think when we discuss, we don't have to distinguish between like a decentralized exchanges with centralized exchange. It is a very important topic, but I believe at this age and time, centralized exchanges, we are competing more with the neobanks and bank-like structures because almost today all your Revolut and Robinhood and everyone offers you crypto. And that's a totally different narrative because then you can buy UI, UX wise you hold, but actually no one knows where you hold that asset. And I think we need to educate more and more people about importance of the things being on chain and them having their custodies in order to build that narrative because with the speed of the traditional financial institutions adopting the crypto is so fast and they have so much money that they can come buy, I don't know, $2-3 billion companies from the crypto world. It means in 2 years we will be more worried about them coming and fully swallowing us rather than us today competing between each other for, I don't know, 5-10 users who are gonna go buy from DEX or SEX. I think that's the narrative we should change and understand how we can educate people and onboard them before the banks onboard them. Because once someone is already buying, I don't know, their Bitcoin on their Revolut without leaving ecosystem, they have zero interest to go to DEX or SEX, I don't know, open account, do KYC, and go through 7 rounds of the hell before even understanding what they have to do. And this is a very important topic that we need to discuss more.
I think the goal is to integrate as many tools as possible, even DeFi in the centralized world. Like we integrated Trust Wallet, Web3 Wallet in Binance, really easy. You can top up or switch funds from the centralized to the Web3 wallet and so on. Plus integration with Trezor, with other physical wallet and so on. But at the same time, educating users from the first step that they get to crypto. And that's what Binance Academy and other learning platforms that we have, I guess, all are doing. That's the biggest push that we do from our side. For example, we push the users to learn on Binance Academy from the first point they interact with us.
Yeah, and then you really mentioned it, like the difference I would say in terms of products, things that we have that are still just starting for DEXs is definitely the institutional product grades. So for example, options, you have some DeFi protocols that allow you to trade options at this moment, but the truth is there are no way on scale compared to what you have on centralized exchanges, which is already, by the way, no way on scale to what you see in more traditional platforms for Forex or for traditional stocks. So, and as you mentioned, we are competing now with banks. When they will join this market, the amount of liquidity that they will bring will make all of this look like really laughable. And they will be able to push products before we do that today are already there in the traditional financial sector. This is actually, I think, one of the most important topic at the moment, like this institutional adoption. And I don't see DEXs, pure decentralized finance, being the place, not only for the reason of liquidity currently that they don't have, but also because there is so much compliance in this world, in this traditional finance world, that to adapt, for DEXs to adapt to this, for decentralized protocols to adapt to this, they actually have to lose a bit of their soul, which is like they would have to constrain their protocols with current compliance and maybe further future compliance notions, which if they are pure decentralized players, they absolutely do not want to do. So I think there is really a place for everyone in this space. They are trying, and actually the fact that they are innovating to put this product out there for the users who still want to use this top institutional grade product, but still be on a decentralized platform is not a bad thing. It allows us also to see how things are done, once again to innovate a bit more, also to offer it into our larger offering among the decentralized products we offer as hybrid solutions. So no, overall, I don't think there is a, I mean, there is this institutional aspect that is really missing on the decentralized side of things, and I don't think this is going to change for at least a long time.
When I have friends who tell me that they're using exchanges, regardless of the name or the volume or anything related to what they're buying on the exchange, my recommendation to them is that they should get a self-custodial wallet and withdraw to that one. It doesn't matter if it's a mobile wallet like MetaMask or anything which is multi-coin. You have Trust Wallet, which is self-custodial. And there are also the hardware wallets that offer pretty good support and decent security. And my question for all of you is, where do you stand in this issue of self-custody? Because I guess the only people who should definitely keep their coins on exchanges are the traders. But everyone else, they should learn how to manage their keys, because that's why we're here for this revolution, right?
Honestly, I love my parents, and they've been using iPhone for many years, but every time they forget their iCloud password that I write on a paper and give to them, they call me back and we go through 7 rounds of the hell to recover it. And I believe most of us has the same issue with their family members. Therefore, I don't believe that offline or cold wallet and storage and seed phases is the best suitable for a certain audience, because at least at the centralized exchange, we have a customer care, we can help you recover your password, and if someone passes away, there's a way to legally claim the next of kin all the rest assets. With the cold storage, probably you can't do that. Personally, what I usually do, I also recommend to everyone, definitely you need to have certain assets in a cold storage if you are not planning to sell them in next, I don't know, year or two. Let's say you're a Bitcoin maximalist and you also don't want to get any yields, you don't want to stake, then you can definitely do. It is the same way you put, I don't know, your dollars under your blanket. I believe no one will recommend you as a financial advice, because you will lose your money based on inflation and all the other things. Why keeping them in a centralized exchange is really better than in a cold storage for 2 reasons. First, it's very agile. You can move your money, you can buy and sell, you can put autofill orders that you can't do with cold wallet. Second, today, most of centralized exchanges like Bitget, KuCoin, Binance, we offer better return on investment than your traditional banks. There are a million ways to stake your assets within the exchange and still have the safety and security of the exchange. Therefore, I don't believe that taking them in a cold storage is the best advice ever. Also considering how you can physically lose it. I'm sure we all know this famous case of the British entrepreneur whose girlfriend or wife threw away this hard drive, and he's still suing the government, trying to clean the entire landfill of the trash place, I don't know, trash recycling center, in order to find his cold storage. And I think that is one of the issues. Unless you are like 100% very well organized person, you know that you will never lose your paper that you wrote your seed phase, then go for it.
Right, but we had the cases of, and I'm sorry for interrupting, but we had FTX and Celsius and BlockFi imploding just 3 years ago. So,
Can I answer to this?
Yeah, you can.
Because this, the exchange bashing discussion that's out of 2022, and it was necessary to have it by then due to the practices that were the practices of 2022. But this is no longer the case. Like, things changed drastically since then, thanks to Binance, us, and later on all the exchange who joined, BitGet included, who implemented proof of reserves, and who also communicate way much more about what's happening with the cold wallets, etc., etc. Each time there is a problem, we've seen it when Bybit had their issue a couple of months ago. Was it a couple of months ago? Yeah, I think already. Time flows by. And yeah, so they were very open to communication. Everybody was following what was actually happening, etc., etc. So times really have changed in this regard. So this discussion was really necessary to have in 2022. Now, to be honest, I would not advise any new user to immediately jump on cold wallet because of the fact that, as you mentioned, they should get educated, but the truth is most people will not get educated about this. And I mean, even my way I see it as how do I stall with cold wallet? After years of being in this space, yes, I cut my private keys into different pieces. I make copies of each pieces multiple and put them in places that I need to physically go to more than one place to be able to access the funds, etc., because it's real cold storage, as you mentioned, not something you want to sell 1 year, 2 years from now. But this implementation actually is time consuming, it's costly, because you need to have like places that you actually trust. It cannot be like, and these days, especially with what you mentioned before, you don't necessarily want it to hang in your family or something like that. So yeah, it's not a suitable option, I would say, for new users if we want adoption. Now, it's the most important aspect is most probably the fact that you're able to do it, allowed and able to do it. That's the most important thing. And if there is any threat about this point at any time, then it's where everyone should be looking at and aiming at and firing without any doubt, because this will be like, I guess, the push to prevent any financial freedom from happening. But this is not financial advice, once again.
We actually strongly promote, I think, self-custody from our side. You'll find in many communications links towards this. However, due to the ease of use of centralized exchanges, you'll see that, I think, less than 5% of actual users will ever had self-custody of their assets. So it's a good thing, but for mass adoption, it's still far away.
And also, like, it's not like centralized exchanges are against, because most of us offer the wallets and cold storage. Bitget wallet is, I don't know, has 60 million users, but as mentioned, it is not the way to be agile and actually make the best of your money, especially most people today in crypto are here to make money and to trade, and therefore having something in a cold storage until you move it to the, I don't know, any platform to do any transaction, market probably will crash or will skyrocket and you'll miss the chance.
Yeah, it's also the convenience of having,
no doubt.
of having on and off ramps, really quickly exchanging your money and taking it out to your bank account if needed, which most of the exchanges offer. Like Binance has like more than 100 currencies.
Okay. I want to go a few steps back because you mentioned something interesting about banks getting involved to compete with exchanges. And you also said something interesting about proof of reserves. And I was going to ask you if you believe that the crypto exchanges as we know them and as they are today are more honest than the financial institutions that are well established within the centralized traditional finance, just because you are more accustomed to the spirit of the space and you're less likely to deal with paper, Bitcoin and Ethereum and Solana and whatever.
I mean, if I can just answer in one sentence, it's just a state of fact. Just by the fact that we are not using fragmented reserves and that we cannot do what they do, which is like print 10 times what they have in their own reserves. Just with that, it's just a state of fact. Now, they have compliance that actually they are trying to integrate in our space to make it harder for us to compete with them when they finally join the space. But currently, as it is, obviously it's much more transparent. Like I don't see any bank actually giving you their proof of reserves. They do like once a year, they give you some kind of reporting about what they have in terms of assets, etc. But they don't even tell you exactly the whole component of their portfolios. They just give you a value and that's it.
Yeah, from my perspective, banks will bring volumes to the industry, definitely, like you said. However, I don't think they will win this game on the long term. I think crypto exchanges, as we are today, are here to win this game with the banks. Why? Because we're more agile, and we understand you, the users, better maybe, and we constantly innovate around your activities and your interests better than the banks that actually want to join crypto.
But also it's very important to like kind of combine this both information regarding like the banks and the way they operate, because banks work closely with the central banks and central banks come to the rescue when it's needed, or entire economy goes down like happened in Argentina and Lebanon, and entire nation suffered and no one helped them because it was like a kind of a domino effect. And what makes centralized exchanges or entire crypto ecosystem better compared to everyone else, I think that we mentioned Bybit hack, and I think it was a great example, because today if any bank goes down, central bank will make a scenario where other bank comes and buys it with its all customers and all debts, and then they try to rescue it. But as an exchanges, as a crypto industry, we realize that there will be no one to come and rescue Bybit, and if Bybit goes down, probably entire ecosystem will suffer, similar to the FTX and any other case. And what happens? Binance jumped in, we jumped in, Galaxy came, and we loaned them the money to recover, and the industry went through that disaster in a beautiful kind of a master class of the crisis management, and we have yet to see such action from any central bank. And in my opinion, while yes, we all try to trust our governments, trust our states, or trust our banks, probably they are more prone to fail, and just because someone else is rescuing them all the time still doesn't mean that they're the best place to store your funds.
Well, it's good to know that proof of reserves is a more common practice nowadays, because I remember when Kraken was the only one that published the proof of reserves, and that was 2014 or something, which was like a year after they launched. So it's very important to have this. And also, I think yesterday or 2 days ago, Michael Saylor got asked if he can publish proof of reserves, and he gave this very complicated answer, like, no, it's not possible because it's a bad idea and blah, 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 which might hint, so don't sue me, Michael Saylor, please, but it might imply that he's using paper Bitcoin and he doesn't actually have the BTC that he claims to be buying. So it's important to...
Infinite money glitch, right?
It's important to work within the limitations of the networks that we're using, because exchanges are just an interface for regular users to access that with their bank accounts.
Yeah, but like even your bank is interface, right? No one actually has that paper money, and paper money doesn't travel anywhere. It is what you see, and that transaction happening digitally. Therefore, we can put everything on an issue of an interface, the same way you order something from Amazon, and everything is an interface at some point.
Anyway, part of the reason why we're here at this event is that blockchains don't really scale. And this is like a multi-billion-dollar problem to solve. How do you make these systems scale in a way that doesn't compromise the decentralization? And I think that centralized exchanges historically have played a pretty big role in helping these networks scale. And you can actually see it when Bitcoin is at its all-time high. Transaction fees are like 20 cents or something, which is funny. And Ethereum is in a similar situation nowadays. The price goes up, but you don't see the volume on chain happening because the trading happens on exchanges. Do you think there will be some sort of equilibrium where after we figure out scaling, most of this will move out of exchanges, or do you think that exchanges will always maintain this power over the networks?
It also depends like the way you transact, and I think the beauty of an exchange is that we can facilitate all transactions in a zero gas fee, and the speaker right before us was talking the importance of having the zero gas fee for the mass adoption, and I think that's where we are going. It's not that we are holding a power, it means we can facilitate transaction faster, better, cheaper, and that is the power, again, going back to the self-custody, being on a cold wallet or doing that transaction on-chain, then you will have congestion, and because when the price either goes super high or super down, that's when people tend to do the most transactions because their orders are getting filled and so on. Therefore, in my opinion, that is the best idea.
Okay. I thought we were going to have a new participant.
You could have joined us.
I mean, you can comment if you want on exchanges being scaling layers for blockchains.
About the scaling question, the problem is that scaling will come with, once again, this institutional volume, and they are not going to do it on-chain. They are really not going to do it on-chain. So to answer your question, plus we do have a wave of products with instant settlement, etc. All these kinds of things that DEX work hard to reach, but it's still like not what actually happens when you use a DEX. Just for the sake of activating smart contracts, etc. It necessarily takes more time than just a centralized order book making it happen instantly. And so, yeah.
So yeah, there are amazing technologies out there on-chain, but unfortunately, they would need to develop more relationship with centralized exchanges in the future. The next updates they make maybe should revolve around better collaborations with centralized exchanges and institutional players.
Can you envision a future where centralized exchanges become layer 2s for base layers, for layer 1s? For example, Binance having a layer 2 of Bitcoin where all of these transactions get settled and you can have your own tokens that get traded and the transaction fees are paid in BTC or ETH or whatever.
I mean, we have BNB chain from our side, so everything will develop based on that, I guess. It's a separate entity, but everything is built on BNB chain. Now, let's see how the collaboration works between BNB chain and other chains. That's the key.
Honestly, I don't think that centralized exchanges necessarily need to become the layer 2 because we are technically doing all the facilitation within our order books, right? And unless the transaction is connected to any side, like outside world, it doesn't much matter to us. And we all use different, like the BNB chain, or we have our own EVM compatible layer 2 that does all the actions on our behalf. But when we talked about institutions coming in, and I think it's a very important factor to understand that most of the institutions are so big, like Fidelity told that they will do their own chain and their even own stable USDT token, that they will be doing all their internal transaction within that ecosystem, because Fidelity manages more assets than entire crypto ecosystem, and for them to coming and relying on us or on Ethereum will be much more expensive than if they develop their own chain. And I think that is what we have to understand in future, how we can build a better product to be cheaper than their own internal aspect, that we can onboard that institutions rather than them being their independent ecosystem.
No comment?
They said it all.
On average, the lifespan of a centralized exchange in this industry is not very long. And your exchanges have sometimes even, I guess, eaten up the smaller players and integrated them into your ecosystems. And I was going to ask you, what's the secret of longevity in this space? How do you manage to stay in business, to keep the regulators happy, to keep on expanding to different territories and jurisdictions, and at the same time stick to the ethos of the space and make sure that you're still promoting decentralization, that you're still operating within the monetary limits of the blockchains and so on?
In the end, most of our exchanges are startups. So you have to constantly innovate, be agile, like I said before. In terms of compliance, we have huge compliance teams in Binance. I'm sure you have also. Constant innovation brings together the users, brings adaptation to each market, and so on.
I think like talking about longevity in 15-year-old industry is too early, because when we look at what we are doing, both exchanges, KuCoin, Binance, even Bybit, and all our competitors and also partners in this industry, because whenever any country wants to do legislation, they call back to us and we consult them how it should work or how it could work, because we know much more about any legislator or any judge or any other traditional player in the market. And in this form, as Ilie also mentioned, it's about innovation, it's about all growing together. And when we talk about sustaining that innovation, yes, it is important, and there are factors like investment, institutions coming in, liquidity, or how we can serve the customer better. But I think the aspect you mentioned, exchanges eating up each other, or especially small players, we also have to understand that most small fractional or local exchanges, they are only like a front-end shops, and they usually take all the liquidity and back-end support, one of the bigger players, whether it's Bybit, Binance, or BitGet, or probably KuCoin. And that's how the entire ecosystem happens. Basically, you become a reseller of the other centralized exchange, and that's why we sometimes have this illusion that, oh, this small regional exchange either got bought or disappeared. They actually just sell back to the original exchange that they were distributing for.
Dropshippers, if you want.
Exactly.
So yeah, this kind of business model actually exists. And at the same time, you were saying it's only 10 to 15 years, and it's maybe too little time to already have that kind of feedback. But in reality, it's already long enough so that we have trends in the industry that we see occurring. And the reality is the market is concentrating by now. And that's also a challenge for builders right now. Builders on Ethereum, for example. When you come with ideas, right now there are lots and lots of projects, of protocols being launched. And it's very hard to grab the attention, to grab the liquidity that you need to just deploy your idea. It's the same thing for most business use cases in crypto in general. And so it's kind of the same challenges. There is this tendency to concentration. And I mean, that's why everybody is expecting an alt season and it's kind of not coming. It's because never forget that the alt season of 2021 was with, I can't remember, like between 10,000 and 30,000 tokens maybe. And we are like at above 30 millions or whatever. So yeah, there is this aspect. Naturally, this will tend to concentrate the market into the largest players, and especially with the influx of other players who are more interested in liquidity pools, etc. Like, yeah, this creates a self-serving circle that in the end, it's very good that we still have the possibility for many players, many builders to launch their protocols and products, because that grants innovation, that maintains innovation on the market. But the truth that builders need to be aware of is it's never going to be easier than today from now on, because the competition will continue to increase and there will be more and more people trying to launch their protocols, tokens, etc., etc.
Yeah, thanks for that, Solana. Anyway, I saved the spicy questions for the end, and we have 7 more minutes. If we don't consume all the time, we can take some questions from the audience. But what I want to ask you basically concerns the situation of the Trump token, right? Because all of, hear me out on this one. All the exchanges have some very strict criteria for listing tokens. In a way, they're like gatekeepers of what's getting traded. And then the Trump token comes along, and the next day, every exchange out there from Coinbase, Binance, Kraken, they all listed it. And it was very weird, because this is a meme coin on Solana. It has a huge pre-mine. It's not fair in any way. It's just very memeable and very popular. And you guys listed. And then I don't want to roast Binance. I think this is the only time when I share the stage with another Romanian at any conference ever, which is amazing. But you guys are delisting Zcash, which I think is the cornerstone of privacy in this industry. And it's a bit disappointing for myself that you're going to remove Zcash, but you keep the Trump token. And nothing against Trump, once again, but it's just what this is. It's just a meme coin that was made by someone very important and famous. And it was very listed, and it has a lot of liquidity.
Let's start with Binance's answer.
Yeah, so unfortunately, liquidity and hype is quite important still in this market. So when you see tokens like this growing so fast, you have to follow the hype sometimes. And unfortunately, from my personal perspective, meme coins are not the solution for this market at all. But the hype is there, and the volumes are huge on this type of tokens. So, in a way,
let's stop it here before you have to call the legal team.
Yeah.
Honestly, like, I think a good answer, but like a very surface answer. 2-3 years ago, when I took over as chief operating officer at BitGet, we only had like 12 million users. Today we serve 120 million users. And when we talk about growth, I always say that we have to do very bold investments because the way exchange makes money is from transactions. If people don't transact, then it means we don't make money. Therefore, no matter how innovative or great your product and token is, if people don't transact with it and trade with it, it means we are not interested. To list or to delist any product, we look at the trading volume, the community, and liquidity you can provide in order to make that trade interesting and opportunistic for the many others. And what Trump token provides is the same, that people are still interested. And when the token lost 35% of its value, he did what any good meme token community manager would do. He told that I will invite 22 people or 200 people, whatsoever number, for a dinner, and then people went and start scooping from the market more and more tokens. It means he understands his value and he's banking on what that token could provide. Yes, that token has very bad tokenomics. There are only like 40 whales who will benefit from this. Even his vesting period is for 3 years only, because he understands that the last year of his presidency he will probably lose interest and he has no chance to be re-elected. And all these mechanisms is actually built in his tokenomics, and I think it's a good way for any projects that is planning to launch a meme token or any hype token. They have to go and research it. That it is a good example how the most powerful man on earth decided to bank on a meme coin in order to make the most money out of it, and he's definitely scooping the market. But I'll give you another example. A year ago or something, we invested $30 million to Tone Foundation and supported all the top-to-earn games. And as a BitGet, we were the first one to launch Catizens, Dogs, and many others that brought us a lot of users. Was it the best investment for us? Definitely, because it has lower user acquisition cost to compare to anything else. Same the reason that we ended up almost all exchanges listing Trump, Millennials token, and any other hype token, because it brings us more and more users in a very low cost. It brings us a lot of new users, almost 80% or some, like the really huge number of the Trump token holders are the first-time crypto holders. It means it also serves adoption. And what is better to any centralized exchange than onboarding a new user in a lower cost that will KYC and start transacting at the day one. Therefore, I don't think that Trump token listing it was any negative for any exchange. And considering the man will be in the office for 4 years, it actually gives us a more long-term projection than any other meme token, because probably meme tokens survive only 3 to 6 months, and here he's at least here for 4 years.
So this is not about right or wrong for the exchange, it's just that you have some sort of methodology for listing new assets. And then it gets bypassed and completely broken just because this is super popular.
Okay, it is popular, it has liquidity, it brings more new users, it's powered by the American president, and he's gonna be in the office for 4 years. All these numbers, if we go, let's say today you bring a meme token to be listed, what we look, who is the founder, what is the potential, how much community they have, and all these numbers that already the numbers I told you about, Trump confirms that it is a much better project to list from a blind point of view than any other meme project.
I think we want to take questions from the audience. If not, we won't have time.
Nice deflection. Does anyone want to ask any question? If you don't, I'll ask them what they have in their portfolios.
Please.
Please.
Okay, so what do you guys have in your portfolios? Any alpha? Anything we should buy?
I can start. So until recently, we weren't allowed to hold any assets as Binance employees. So yeah, I didn't have time to buy anything. I'm USDC holder, that's it.
Why would you hold that?
Sorry?
Why would anyone hold that? I don't get it. Unless you're from Latin America.
USDC is the biggest regulated stablecoin in Europe now, in the MiCA region now. So I guess it's important for the European market in a way. And it's easy to do transactions through Binance Pay for me. That's why I hold it.
For me, I definitely get to hold some BGB token, which is our centralized exchange token, because I get compensated in that. And the rest of my assets are in Bitcoin. I do dollar cost averaging for many, many years now.
Nice. What about you?
And we unfortunately ran out of time.
Oh.
He holds some Trump token. He went to the dinner with Trump.
Dorian, we'll get you drunk tonight and ask you.
Super fast. Like, okay, I've sunk my own ship for 3 bull cycles already, so I'll keep on sinking my own ship and not yours. This is fine.
Okay, that was our time. Thank you very much. Round of applause
Thank
for
you.
the speakers.
Thank you.